The April real estate stats are out, and once again, homes are at an all-time high price. Hello and welcome back. Today we are discussing the April real estate stats here for Vancouver. They're fresh, they're hot off the presses, and I think to no surprise, almost everything again is hitting all-time records. We'll start with sales, as we always do. The big story here, and lots to look behind this number, but home sales were up 343% last month. Yeah. I mean, it sounds ridiculous because it is, but it's ridiculous just because remember, April of 2020, that was, of course, the first true month of the full lockdown, right? So everybody was kind of in a panic. Everyone sat back and said, what the hell is going on? And understandably, there were very few homes sold, right? Back in April of last year, it was about 1,100 homes that sold, even during a full lockdown and pandemic. Whereas last month, it was 4,900.
Oof. Whoa. That's a huge jump. I mean, obviously you can't really, the baseline is so low. I mean, the economy, let alone the real estate market, the economy had pretty well shut down, right? So everyone was buying booze and toilet paper and all that stuff, not homes clearly. Right. So the stats are they are monstrous if you were to not give them any context. But I'm more interested in kind of the month over month performance here. Because if anything, we actually saw decreases. I mean, the story, the media is going to have fun with the headlines with 342.6% increase in sales volume. But generally speaking, compared to last month, we're down 14%, right? And that's the story for people who are in the market or people thinking of buying or selling, right? I mean, we talked about it last week. We talked about a bit of a pullback, a slowdown in the marketplace, and I mean, it's not a bad thing because you can't keep that pace. It's just not sustainable. It's not healthy for any marketplace, right? But we did need to surge back. We did need to, rebound, and that definitely happened. I think now we're starting to see, like we talked about last time, price stabilization. We're starting to see, the foot come off the accelerator. We're also seeing, I think we're seeing buyer fatigue. It's really setting in here. There's some people who are still trying to buy homes who have been outbid, and now the prices have gone up to points where they might not be able to get in anymore. Especially in the single family market, right?
Yeah, I agreed with all of that. And like Ryan said, you got to really look over. Well, there's two important data pieces here, and they're somewhat opposing. But yes, a 14% decrease in sales from last month, right? Now we know March of 2021, I think will stand and hold these sales volumes and price records for some time, for many years likely. So we've seen the absolute top as far as sales, and now things are starting to decline. And there's some important numbers here to recognize. So starting with that 14% decrease from last month, but still 56% above the 10-year average. Right. So so we're still seeing, of course, huge sales volumes, but of course you come off of an all-time high, you would expect that. But again, when we're talking about a downward trend here, which is what we really want people to pay attention to, the March 10-year average, it was 72% above.
Ooh,
right?
Wow.
So a huge number last month. And again, so 72% dropping to 56%. So while things are still highly elevated, the trend is kind of slowing, right? We're kind of bending that curve, but off all-time highs.
I mean, we're not coming on here and saying that it's not busy or that, real estate is going to tank or anything like that. Quite the opposite. In fact, I think price appreciation is going to continue to go. I just don't think it's going to climb at the velocity that it's been going, right? I think it'll plateau to some degree here. We do have high inventory numbers. A lot of the quality of the inventory is suspect, but what we're actually seeing though are, people who are going to buy a home last year for 1.3 million, a single family home, that same home now is 1.5, 1.6, in about a year difference. And for some people, that's push them now out of homes and into townhomes, right? Um, and so uh, I think you're going to see a bit of a slowdown just because price has crept, right? Inventory is still there, but expectations for price are much higher. Um, and we've, the marketplace has changed, right? So it's still going to grow. It's still going to go north in terms of price appreciation, but just not at full speed.
I agree there. I totally agree. And I think that's going to start to show here when we talk about inventory and newly listed
Yeah.
homes, because, it's supply, right? We've talked about supply forever. And if
Sure.
people have more choice, there will be less multiple offer scenarios and a bit more of a balanced market. So last
Completely
month,
agree. Yeah.
yeah, right. And so last month we saw about 7,900 homes listed in April. Um, Similar to
Ooh.
the sales, right? People really pulled back in April of last year, understandably. So we saw something like 2,300 homes listed April 2020, and the 7,900 for this month. I mean, it's a 243% increase. So again, crazy
Right.
numbers, but off of an incredibly low and understandably low baseline, a pandemic line, if you
Mm-hmm.
will. But but and this one's actually really interesting. So we look, month over month. March, with the all-time high listings, it was a 4.2% decrease. Not huge,
Mm.
but there was 8,300 homes listed last month. So to pull back a bit to 7,900, a bit of a shock to me. I think I thought that might actually increase in April. Not too far off
Mm-hmm.
at 4.2%, but
Yeah.
on the other side of that coin, the 7,900 homes that were listed was an all-time high for the month of April.
Right. Right. So it's coming off of an all-time high. Um, but that being said, I think the decrease by about 4.2%. I don't know how much the marketplace is going to feel that in a rising market.
Yeah,
I,
it's
I think
nominal.
that'll just, yeah, I think it'll be a bit of a moot point. But that doesn't negate the fact that a lot of homes are getting listed,
Hmm.
right?
Yeah,
It's a lot of homes.
yeah, that's it. It is, and this is finally starting to affect total inventory. Right, we've
Yeah.
now cracked the 10,000 mark for active listings out there for
Yeah.
GVRD at 10,250, and this is 9% higher than April of last year. But here's a big
Mm-hmm.
one to really pay attention to. There's 12% more homes available than just last month.
Yep. Yep. And that's
That
why you're going to have some price stabilization. There's
Yeah.
no, I mean, it's going to happen. And you compound that effect with buyer fatigue and raising, um, like, fixed year 5 rates or 5 year fixed rates, that kind of stuff, making it, you've got OFSI coming in here, increasing the stress test. These things are going to start to impact the velocity of the market. And there's just no question about it. It's coming, right?
Yes, I fully
I think
agree.
these are all the indicators, right?
That's
So
it. Yeah.
yeah.
I think let's pull back a bit. It's always nice to look at the bigger picture. 10-year April average, active listings about 11% underneath that 10-year average. So it's creeping up, right? It's starting to get closer to the average amount of listings. And again, if we look at last month being sort of that benchmark high, that record, it was
Right.
18.5% below.
Wow.
So there's
Wow.
about a 7% spread that's jumped just in that 1 month.
It's a lot for
It
one
is a
month.
lot.
It's a lot for
Yeah,
1 month,
that's
right?
right.
So yeah, it's yeah, foot's coming right off the accelerator, and it's starting to slow down, right? And now with a caveat, because we're sitting here today recording this podcast, and I've come off of 3 um, subject free multiple offer scenarios in 3 different marketplaces, over, all in the single family, realm. And one of them went for 340,000 over the list price, right? Received 7 offers or 8 offers or something like that. One in Langley, same, was listed at 1,488, sold for 1,622. Um, you know, uh, the I can't really divulge too much about the offers, but only to say that we were 200,000 plus over the list price only to get smacked around. So it's still happening out there for the right property and in the right neighborhoods. We're still seeing that level of interest, and we're still seeing that combative uh, buying scenario, right? So you are finding more and more homes maybe getting, like 2 or 3 offers as opposed to 10 or 15, right? But again, these are indicators to show that people are either buying their homes, they're winning over time here, or they're choosing different asset classes, which I think is another part of the conversation.
Yeah, and this is a very different tone that we have now than just 4 or 5 weeks ago, when it was still
Oh,
multiple,
completely.
multiple, multiple, and across the board. So yes, while there is undoubtedly still highly contested properties, it is a shifting market. So like we said, right,
Yep.
it's changing, right? It's not downward, but it's changing, and it's changing fast. I think
Mhm.
if we look to, let's say, the that sales to active listings ratio, well, still understandably heavy on a seller's market at 48%, right? Anything over 20 is sellers. So at 48, we're way up there.
It's high, really
It's
high. Yep.
high. But, and here's the caveat, as we say, last month it was 59. So
Wow.
sales
Well,
to active
that's
listings,
12% drop.
yeah, it's dropped a lot, significantly in 1 month. I mean, if you see an 11% drop in 1 month, that's a very telling indicator of what's coming, right? So, like we said,
For sure.
last month was, I think, all the data here. What this is screaming to me is last month was absolutely the peak for sales and listings and sales to active listings ratio, and now things
Mhm.
are cooling down. Um,
Right.
Prices are
I
the
also
are the lagging indicator, right? Prices are, I think, going to go up for at least another month or two here, HPI wise.
Mhm.
But then get ready, because that is shifting.
Well, and just a little more to the sales to active ratio, because it talks a little bit about going from the expensive single family market and then the trickle over effect into other property and asset classes, right?
Very
So
good point.
you look at the detached homes, right? We're 37.4% sales to active listing ratio. Great. Still very strong sellers market in any
Mm-hmm.
marketplace.
Mm-hmm.
Incredibly strong. But townhomes, 70% sales to active listings ratio.
Wild.
So what we're seeing there is the price of homes getting to a point where now, the vast majority of people can't afford them, and they're spilling over into townhomes because the price point is significantly less, and a lot of the action is happening in that townhome duplex, which I think is going to be a contested space for quite some time. And then apartments are showing strong numbers now. 51.5% sales to active listings ratio for apartments, right? But remember, single family homes are the leader, right? So when they start to taper off, it's a lagging indicator. The other two they're gonna spike, but once that interest and once that purchasing takes place, and I'm including with the rising inventory, these numbers aren't going to hang up there. They're going to come down, right? The only thing that really is going to continue this run is new people coming to Vancouver, and right now that's tied up because of vaccination issues and closed borders. Even though we do have permanent residences coming into place, but a lot of those permanent residences are already here. They've been just waiting to get their permanent residency status. So some of the purchasing will continue, right? Especially in the more affordable sectors, but for how long, we'll see.
So with all this data, with all these sales that are happening, with the sales to active listings ratio still so high, understandably, average prices did increase last month. They
Mhm.
increased by 2.6%.
Ooh, that's a big
Yeah,
number.
it is a big number. Over last month, we're talking about, not year over year. It's
Yeah.
12%
Yeah.
year over year, but 2.6 just from last month, bringing the HPI benchmark price of your average Vancouver home to $1,152,000.
When do you remember when it like crossed a million? When
I
was
do.
that?
Yeah, of course. And sure, let me pull that up. Okay, $1 million. It crossed in. Oh, we got to go back all the way to January 2020.
Wow. So 15%, 15.2% increase in 15 months. So we're seeing roughly 1% per month increase in price year
Yeah.
over year.
Well, we're on, gosh, what is it now? Well, actually, let's just dissect this year, okay? Because
Yeah, yeah.
2.6, again, is a huge jump. In
It's a huge jump.
January, if you remember, it went up 0.9%. February,
Mm-hmm.
2.6 as well. Uh, but then
Yeah,
March, that the last month or 2 months ago, the record at 3.6% in 1 month. So again,
yeah, that's
I
big.
I think that month will hold that record for many years. I really do. And so
Yeah,
again,
yeah.
here we go. We saw this peak in March and April. While 2.6% in a month is a massive amount, right? We typically want to see that in about a whole year. It is a full percent off of the record month of March. Um,
Yep.
but think of it
Can't
like
ignore
this:
that.
like it's May. It's the first week in May, and your average property price is up 9.7% this year in 4 months. Yeah, that equates.
So-
That's $105,000. The average home has increased in price just in 2021.
wow,
So
that's a lot.
when we talk about people and first timers and people trying to get into the market, imagine thinking you were doing the right thing by saving money towards your down payment just to get a little bit more as opposed to getting into the market, for example. And let's say you're doing great and you are saving 5 grand a month after tax dollars in the bank and you're up 20 grand so far for that down payment. Well, you're actually behind by $85,000 because the average home has gone up that much more than your savings.
Cash is trash, man.
And obviously everyone's
Not
situation is unique, but it's one way of looking at the market and how saving, if you have the ability to get in and you've been wanting to get in, that holding back maybe wasn't the right plan for you. But again, nobody knows the future, and here we are talking about the upcoming likely price declines. That's
the
worth looking
other
at.
yeah, the other side of that 105,000 is that it's tax free
That's right.
if it's your primary residence, right?
Mm-hmm.
So, if you yeah, people often think, well, I'm just going to save a little bit more and then I'll be able to buy what I want. And, then they try and time the market and then they ultimately lose. And, Dan and I have preached for years. It's your time in the market. It's stop trying to time it, right? I mean, we've talked about how prices are, I wouldn't say controlled, but influenced in such a big way in Canada. Uh, this is where people from not just in Canada, 76% of Canadians put all their money into their real estate. People from all around the world when they move here do that too, right? So, even if it means getting into a property that's imperfect to begin with, you got to get in. You got to get in, or you'll be left behind, right?
Mm-hmm. Yeah, well, we're
And
seeing it. And
yeah,
look, I mean,
that's
prices, when we look at this cycle, prices have been on an upward trend for 20 months now, right? Since September 2019, where we've seen $168,000 price appreciation during that run.
yes. So it's not unreasonable to think that there's going to be some kind of a pullback here. You just don't go straight up, right?
That's
It's
it.
just not possible. Not unless you keep feeding it with new people and new product and all that kind of stuff.
Yeah, one
Um,
thing we know for certain is that the real estate cycle, the real estate market goes through cycles. Um,
yeah.
the real estate Michael. So it
Is that what we're
does.
calling it now?
Yeah. So the market goes through cycles. What we don't know though is how long each cycle lasts, right?
Correct.
Here we
Yeah.
are sitting at a 20-month bull run essentially, and now
Mhm.
we're feeling a shift. Now we're feeling a peak, and it will go to balanced and then it will go down. And while we don't know how long the downward trend will be, it is all but certain that it will hit bottom and come back up as well.
So
So
before we go, further into some of these stats here, a narrative that, like, a big part of the coronavirus narrative in real estate was that people moved from the downtown core and moved out to the suburbs, right? And we saw a huge surge in prices in the suburbs, and we saw the opposite happen in the downtown core. And this has been going on now for, call it, 20 months, right? The question I have, and you know, I think people over the last year and a half, 2 years, they've been begging to do anything other than now be in their house locked up, right? So my question is, are we going to start to see some of this push back into the downtown core? I mean, imagine in 2 years when you can go out for dinner with your friends, you can then go to a nightclub, walk back to your place at, Yaletown, and then, the following morning, if you can get up, you go to work and you can walk, right? These are, questions I'm wondering about because there's such an inverse relationship that we saw, coronavirus shutdown, densified core loses value, spread out space rises in value, right? Once we take away the coronavirus setting, what's going to happen to the other side? It's a question that, it's a bit of a micro market shift. I get that, but it's pertinent information for Vancouver. I wonder if we're going to see a bit of a surge in the downtown core over the coming years. Um, especially as people start to really go back to work and you start to see the influx of some of these software companies that are building towers downtown start to bring their thousands of employees across the line. What's going to happen?
I certainly think it will. I think there's a few data points that mention that. A big one that we touched on earlier was the Salesforce poll that they did with all their staff, right? And the most recent one showed that 75% of their employees wanted to get back into the office space. A lot of people
Wow.
have a bit of cabin fever, I think, and are missing human
Yep.
interaction. Is one part of it,
Yeah.
right? People do like a bit of change, and also, I don't know how many bosses out there told their employees that, yeah, go buy a house in the burbs because you're never going to have to come back. I have
Yeah.
no idea how many said
Yeah.
that, but I guarantee you it wasn't all of them, right? And maybe some
No.
people went
No.
and bought out in an area thinking that the pandemic was forever or that they could work forever from home. I can't speak for everyone, but I think there's going to be a huge migration coming back into downtown for sure. And I
Yeah.
mean, if you look prior to the pandemic, as far as what prices were doing for properties downtown, I mean, they were on a strong upward trend from, mid-September, kind of when that market
Yeah.
bottomed out as a whole, up until literally March 2020, the month before the shutdown or the month of the shutdown. So had the pandemic not come into play, that
Mhm.
trend, should it had carried just a few more months, would have been at all-time highs.
Right. So it's
And
due.
yeah, and right now we are like, within 9 grand of the pre-pandemic downtown condo prices.
Well, then it begs the question, right? I mean, a lot of economics, you have inverse relationships. So anytime you see shifts in the marketplace, you can kind of predict, looking back, of course, what's happened in the past, you can kind of see where things might trend forward. And I feel that uh, there's going to be a drive to be. I mean, I don't know about you, Dan, but I'm sick of hanging out at home, and I can't wait to go traveling. I can't wait to go on a boat somewhere. I can't wait, like a cruise ship or do something where I'm not in a 1,100 square feet,
Mm-hmm.
and or like we're lucky as realtors we get to go between cities, but a lot of people can't even do that, right? So it does beg the question then, are we still going to see a surge in tourism? I think that's going to be a huge place, right? So things like Airbnbs and vacation properties, they're still going to be very strong, I think, in the coming years. We can't go anywhere this year, that's for sure. Um, and we might be able to start going places maybe at the end of this year, early next year, but then we got to vaccinate children and all kinds of stuff. It's still going to be a long time, right? So the demand and the desire for these things, I think, is just going to grow.
Fully agree. I fully agree. I think the world is going to be, uh, like you said, the tourism market is going to come flying back. People are going
Yeah,
to travel and spend more money on recreation and entertainment than they have the last couple of years, obviously,
sure.
But I mean, I think even
Absolutely.
an above average amount should the pandemic not have kicked in, and it might
Well,
sustain for a while because there's just so much
yeah.
pent up, desire to do that.
Well, and just even people's mental health. Like at the end of the day, I wonder, like, well, I wouldn't normally go to Penticton in September, but maybe I will this year, and I'll take my kid out of school for 3 or 4 days just so we can do something different,
Hmm.
right? And
Yeah.
and that's gonna fuel a market. There's gonna be economic spin-off as a result of that, right? And so, you know, it's a good place to maybe, if you're thinking about Airbnbs or you're thinking about investment, the downtown core, I think in the next couple of years, currently anyways, vacation properties are going to continue to be very strong. And I think that's the sentiment of just people being locked up.
Yeah, I agree. Yeah, and let's kind of look at the result of that, right? When we talk about these sort of different property types or asset classes, where apartments, like you just touched on, they're up about 6% year over year, and 2% of that came from just last month.
Yeah, there
So
you
a
go.
third of the gains were just last month. So if you want to talk about, the sort of new attraction to condo living, we've been seeing it for a few months here, basically since the new year.
Yeah, and again, that's a result of other asset classes becoming unaffordable as well, right? But don't mistaken that just because they performed like 6% in the last year, that they're not going to do 6% again quickly, right? So
Yeah,
something
and
to think about.
when you talk about being priced out of other home types, I mean, look at detached. It's up 21% year over year.
Oh, a monster.
21%, right? I mean, we're at 1.755 now for your average detached home.
Holy cow!
We're like just a huge
That
year over
happened
year
fast.
gain. Yeah, well, and it's happening fast. I mean, look at the 3%, 3.2% it went up just last month.
Yeah, 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 man. I agree, and you know, um, again, I think those prices aren't coming down. I think they might soften in terms of, um, velocity of sales and whether or not we exist in a seller's market or a buyer's market or a more balanced market. I think that's a different conversation, but I don't think you're going to see price depreciation at anytime soon here. I
Okay.
just think you're seeing a cooling, right, or a bit of a pullback
Yeah.
in that marketplace.
Interesting. Yeah,
We'll see
the
though.
data's
Could
changing
change.
quick.
Could change.
Yeah, well, for sure. We don't control this; we report it. And I guess
Yeah.
lastly here, when we talk about townhomes, right, especially here, because like Ryan touched on earlier, a lot of people priced out of detached moved into the townhome market. That actually saw the biggest month over month increase last month at 3.3%.
Wow.
Townhomes are now over $900,000, and they're up 14% from last year.
I
So you
remember
can
when
see
they
it,
were
right?
like
Detached up 21, townhomes up 14, and condos up 6. That's basically what's
it
happened in
was
the
like
last year.
it was like 3 years ago where townhomes were 720,000, and now that's like the average for apartments.
Mm-hmm.
It's very, we're seeing again, even in the pandemic, post-pandemic, pre-pandemic, the resilience of this Vancouver marketplace it's incredible, but it's also, as we have unpacked in other um, episodes, it's also by design to be like this,
Right.
right? So, but it's working against or working against natural outside forces. It's staying very strong. So,
So I want to give a little bit of a crystal ball insight here.
ooh,
Early
are you
data
gonna are
here.
you gonna swear by it?
um, Somewhat, yeah. I mean,
Okay, all
we're the
all right.
professionals. We're here to make predictions, right? We have
Yeah,
people
yeah.
relying on
Okay.
us for what we think is going to happen in the industry, and while looking, 4, 5, 6 months out is nearly impossible. Immediate
Mm.
data, and so we're recording this on May 6th. It's a Thursday. We've got 3.5 days of preliminary data for sold and new listings here in GVRD, and so far, for the first time in about 20 months, the initial 3.5 days of sales prices are retracting a bit. We're seeing the median price as much as, sorry, let me double check I say this correctly. Yeah, median
Yeah.
price is down
Yeah.
about $45,000. Now, again, 3.5 days of
Ooh.
data. It's early. Let's not, jump to any conclusions yet. But with everything else peaking last month, and we're seeing the downward trend happen in April, the downward trend is continuing here in May so far.
Yeah. People are looking at other asset classes to buy. Right. It's so expensive. It's
Yeah,
so expensive.
that's it. Well, yeah,
Right.
and I think
They're
too, Ryan, I think you're right. The lower priced properties maybe are starting to become more attractive, right? We're seeing a little bit more volume there as well. People
yeah.
aren't
I
buying
mean, we're
the detached
I
homes
think
as
you're
much as they're buying the townhomes.
yeah, and I think if you go down to the entry level of the $500,000-$600,000 kind of area, it's it's really fierce
Yeah,
in
that's right.
that realm, right? It's like, oh, it's basically the single family home market 6 months ago,
That's
right?
right.
But
Yeah.
and I think that that's really because affordability is just so tough, right? And I think that that's why we're seeing such high levels of competition, because like you said, if you can make 3% even at 500 grand, you move $15,000 in a month. Most people don't make that kind of money in a month, right?
Hmm.
So you know and you're certainly not making 15% on your cash in a savings account, right? So I mean, that money can either sit in a savings account or it can sit in your property. You know what I would choose, but anyhow,
And we do, and we do. And
yeah.
another data point here to share, that's going to be an indicator. The new listings compared to new sales this year, listings are more than double so far.
Ooh.
Again, early data, but what are we seeing here? Right, we're seeing everything trending down, and we're seeing listings going up, which means more, supply, which means more opportunity,
More
which means
softening.
less multiple offers. So
Yeah.
here we go. It's early data, but these are all the signs to me are pointing that we're going to be in a balanced market within a couple months.
Yeah. Yeah. I mean, speaking in averages for sure. I
Yes.
would
Oh yeah. Of
agree.
course. There's always going to be
Um,
pockets.
yeah.
Um,
And yeah, that's, ooh, I could absorb that for a minute.
yeah. No,
A
it's changing.
balanced market.
A
That means
balanced
I could
market.
actually I could put a condition back into a contract.
Glory days are back. Are coming back. Yeah,
Well, I
it's safer,
mean,
right? It's been, as we know, it's been too one-sided, too unhealthy for too long. A balanced market is okay. It's a great place to
it
be
is.
for
It's
both sides.
encouraged.
Yeah, that's right.
I it's interesting because I think in the last maybe couple of months we've seen some articles come out in the Globe and Mail about realtors um, listing low on purpose and generating multiple bid opportunities and trying to push the price up to crazy levels. Um, and I just want to say that, like, in the last month or so that I've dealt with realtors on the other end, and a vast majority of the transactions I've dealt with, they've been nothing but absolute pros, trying to really bring obviously what's best for their seller into play, but trying not to let it get out of hand too, right? I think there's some we just can't, because we're contracted, or we're bound by our contracts, that we can't really divulge a lot of the information on what actually happens in these scenarios. But and it never hits the press. It's always the bad news that hits the press. But really, generally speaking, a lot of these real estate agents that I've been dealing with have been nothing but absolute pros, trying to have a fiduciary relationship, not just with the seller, but with the marketplace too in general, right? We don't want a marketplace that's this hot. It's not good for everyone. It really isn't. It's not good for realtors. You got to remember, everyone thinks that realtors are making a bunch of money in a hot market. You got 10 people bidding on one property. There's 9 people that don't get paid, right? And so it's not quite the sentiment that we're hearing in the headlines. you know it's not it's the exception, it's not the rule. And I just want to say that because I think I'm pretty proud of some of these realtors and the way they've been conducting themselves and the way that they've handled some of these sales, and you'll just never hear about it.
That's true, and a good shout out. I appreciate that as well, and it talks to knowing and doing the research about who you work with, because it
Mm-hmm.
is a very easy industry to get into. There are a lot of less professional people in the industry, and you want
Yeah,
to make sure you're working with someone fantastic, because now more than ever they're going to treat your property correctly and do what is truly best for you, and get you
yeah,
as much as possible, but in an ethical and above board way.
agree. Yeah.
Cool. So a couple things just to wrap up here. British Columbia Real Estate Association, they've come out with a prediction for the year on total appreciated values, and they're pegging it at 14.3%
By the end of the year.
by the end of 2021. So keep in mind, we're already at 9.7%. That said, I truly believe there is a leveling off and maybe even a decline by the end of the year. And, 14.3, I don't mind that number. I think they're actually fairly in line with what can happen, barring any unforeseen major circumstances here.
Well, it really feeds into the narrative that we've been talking about. I mean, you've got 9+% of growth in the first, Q1, Q2, or part of Q2, and we're talking about, the foot coming off the accelerator. We're talking about price stabilization. If we grow another 4-5% by the end of the year, I think that would be a really good trajectory. It is possible that we'll overshoot and come back, but I think that with the down, I guess with like we said, the deceleration taking place, I think that's I think they're right on as well. I
Yeah,
could see that.
nice. So Ryan, and here's something else further to your downtown comments about the interest levels coming back there. For the first time since January of 2020, downtown one-bedroom rental rates stopped dropping.
Wow.
Yes, and that obviously means the demand is starting to come back. And I wouldn't be surprised if we see by even next month or even June that those rental rates are starting to increase again.
Yes, interesting.
Yeah, so they dropped about 11, 12% in total and stayed flat in April. And I do expect them to start increasing pretty soon here as, as everything we just talked about starts to happen, the vaccines, cities opening up, etc.
Totally. No, I agree. And, one of the other things that I think we should talk about, there's still, I mean, on the pre-sale side of things, flying like crazy. Like we were looking in, I know Dan had clients, I had clients looking at a project in Squamish. They had 93 units for sale, and 93 apartments. There were 5,000 applicants, and they sold out in 2 days. Was it, Dan?
Yeah, basically 48 hours.
Yeah.
Done and done.
Yeah. I know that 60 units were sold in the first day. Right. So, and that started at 10 and ended at 7. So, and trust me, they could have sold all of them that day.
Yeah, for sure.
So it gives you less than a 2% chance of people trying to get condos in pre-sales, right? Mm-hmm. So that demand, that's real. And I think what people are seeing are kind of what we just talked about happening into apartments, right? I think the affordability levels are getting so high on the other side that now investors are going, well, the whole market's going to pull up. So let's get in the asset class that's going to grow the most going forward. And I think that's what you're seeing.
That's exactly it. Okay, everyone. Thank you as always so much for checking out this week's video and podcast. For all your real estate needs, please check out thevancouverlife.com, and we look forward to bringing you more info next week. Yes, right?
And if you are still listening, please hit that subscribe button.
Yeah. No, we're seeing tremendous growth, and we really appreciate everyone who tunes in every week. And we look forward to always providing you really really strong and thorough insight every single week to help you guys make your educated real estate decisions.
See you guys next week.